Yoana Nin here with the Prosperous Agency. As promised, we are going live. It's just a little bit before 1 o'clock. I have a very special guest with me today. His name is Johan Alvarez with Guaranteed Rate. Johan has been in the business for over 15 years now, and he's been helping many hundreds of people purchase homes. So I have given you a heads up just because I think this meeting is super important. I'm going to be talking for another 1 minute or so just because I like to hear myself talking. No, I'm just kidding. Just because I want to give people time to kind of come in. I know that it's not quite 1 o'clock yet, but I wanted to give everyone a heads up. This is a super important Zoom call that I'm having here. Johan is on the other line, and so you guys will be hearing what he says. If you have any questions at the end of the call with Johan and at the end of the live video, feel free to reach out to me at 919-348-7303, or you can PM me, you can send me an email at Yoana at the Prosperous Agency, and we will be able to assist you. There's a lot of questions out there, right? So as a realtor, I get so many people call and ask about the rates, which I've already done a video about the rates, and the rates are not the only concern, right? There's a lot of people that are concerned about whether or not they're going to be able to make their monthly payment, what's going to happen, you know, are they going to go into foreclosure, how is this going to affect their life, they're losing their jobs. Then on the other side, there's people who are refinancing, and on the other side, there's all these people that are wanting to buy a house and find out that some programs might not be available anymore. So overall, we are getting, as realtors, we're getting calls from all sides and from all angles, and we really don't have the answers to everything. However, we're doing our best to get the most that we can from everyone, right? So that's why we keep in contact with our preferred lenders. We're asking questions from our attorneys. There's addendums that have been added to our documents because of the COVID. You know, what happens if you lose your job while you are under contract? And it's just revolutionizing the way we do things and the way we have been used to approaching things. So again, I see that you guys are watching. Welcome. You will be seeing this video on my YouTube, and I'll be doing a lot of YouTube lives as well, but this one particularly will be uploaded. So if you want to rewatch it, feel free to subscribe on my YouTube channel, Yoana Nin for now. I have the Prosperous Agency as well, but that's the best way to see everything and to just save it there in your inventory, you know, for things to watch whenever you're on a walk or when you're driving or whatever happens and you might need to refresh your memory. So again, for all of you that are joining, thank you so much for being here. I'm Yoana Nin with the Prosperous Agency. I've been in the business for 9 years now, and I love what I do, and I'm here to provide value to all of you guys thinking about buying or selling a house, or for the agents out there that might need ideas on what to do. Guys, whatever you do, I don't care what you do, just do it. Do it, provide value to your community, because that's the only thing that is most important in times like this. So I have done my talking for 1 minute until everyone is joining. Thank you so much. I'm here with Johan Alvarez from Guaranteed Rate. Hi, Johan.
Hey, Joanna. Thanks for having me. And hope everyone that's listening to us is safe and healthy wherever they are.
Absolutely. Johan, what's going on with you guys? What's going on? I'm going to dive straight into my first question. What are the options for people who currently have a mortgage and they're not able to make their payments?
Yeah, so the recommendation is for them to reach out to their current loan servicer. So whoever they're making the payments to, it's very important that they communicate with them right away. You know, today is April 14th, so usually, you know, we have to make the payments by the 15th of the month. So if they haven't already, please reach out to the loan servicer. They will provide the options There's a lot of conversation about forbearance. That's probably a common topic that a lot of people are listening to on the news or from friends and family. So it's very important that they understand how that forbearance option works and understand what the options will be with their current servicer after that forbearance period expires. So that's really the key, the recommendation. Just because the government has informed that late payments will not be recorded on the credit report doesn't mean that you don't communicate with your loan servicer to let them know that you're having a difficulty and that you need help. You definitely do need to reach out and make sure that you structure that agreement with them as soon as you can. And be patient, because they're receiving hundreds of calls, so you may be on hold for a while, or you may not be able to reach someone right away. So if you're not able to do it electronically and you're trying to do it on the phone, you may need to separate some time to get it done.
Right. So I'm not sure if anyone can comment, if you don't mind. I want to make sure that you guys are hearing what Yoana is saying. So he was talking about the forbearance, and he was highly recommending for all of you guys to definitely contact your mortgage company, just because you can't just assume everything is going to be fine. And so from our perspective as listing agents as well, right, if you guys are in a situation where you're considering selling your house and you're not making payments already, I would highly suggest at least letting us know what the situation is. Obviously it's not in effect yet, right, unless some of you have already started the process, but if 3 months from now you haven't paid your mortgage, we're definitely gonna know, we're gonna find out, and things will probably change and they will be addressed by your mortgage company. However, that's something to keep in mind. So can missing the April payment affect the qualification process? I'm asking Johan.
Yeah, that's a great question, Yoana. It's something that is being discussed right now. So we haven't received any direction yet. We really don't know, right? So this is something that is new for us in the industry. I think that the government has placed measures to help everyone, but they're still discussing how this is going to affect, if it will affect, qualifying for a future loan, for a future mortgage on a purchase.
Yes.
That may be a follow-up topic that we have, but as of now, we haven't received any direction on that yet.
Right, because it's so uncertain, right? So they're saying, okay, we might be allowing you to not make a payment for a month or two until things are coming back, but then how is that going to affect? Again, this is such a big confusion for everyone that you can't just take one thing that you hear on TV and just decide this is how it's going to happen, because you don't know what the situation is or what the situation is going to be 100% until maybe you have something in writing, right, and an assurance that this is what's going to happen, and you know that you're okay with not paying for 2-3 months until maybe you get your job back. So my advice as a business owner and as a human being beyond the realtor and beyond the mortgages, don't do anything, just don't rush into doing anything, if I should say, and be very cautious about what you do.
I think that, if you can make the payment, we are always encourage people to do so, right? We don't advise to not miss, to miss a payment, to not make the payment. But of course, if you're having some type of difficulty, then the best thing to do is to reach out to your current servicer, your current mortgage company, and just find out what your current options are. As far as future effects, I'll definitely let you know as soon as I have an update on that. But I don't think that as an industry, anyone has received any guidance on how we're going to handle that yet.
Right, and so from your perspective as a lender, I've heard that some of the lenders are actually tightening their guidelines and their programs. What's going on from a guaranteed rate perspective, if you don't mind sharing that with me?
Yeah, sure. So what's happening is that we're seeing default rates increase, right? And it's something that's expected due to the increase in unemployment. People are having to make decisions on who to pay first. Do they pay credit cards or loans or utilities or mortgage or rent, and in which order are they going to pay for that? So investors and lenders in general are seeing a lot of risk ahead because it's affecting everyone evenly. It just, no matter what your income is or where you work or how much money you have, this situation can affect you as much, in any situation that you're in. So we're seeing that guidelines are tightening up. The minimum requirement, for example, on an FHA loan used to be 580. Here at Guaranteed Rate, we've increased our minimum credit score requirement to 620. So now it's the same minimum credit score as conventional. But we're hearing about other lenders in the market increasing it even higher, not just the government programs, but also conventional. In the news just recently today and yesterday, we were hearing about JP Morgan Chase, increasing their minimum credit or considering increasing their minimum score requirement to 700 with 20% down payment. So a lot of lenders, a lot of banks are trying to be very conservative and careful with their lending practices and not wanting to take a lot of risk.
So I just want to clarify something for the people that have already entered contract on a house. So let's take an example. If someone had already locked an interest rate from a guaranteed rate perspective from your company, nothing is changing with the people that have already locked something, right? Or if you met with them last week, regardless of what's going on right now, since you've already had that conversation with them, and let's say their credit score was 690, 590, 600, and they were qualified for an FHA. What's going on right now? So we are in between that. We've already had a conversation with you, Johan.
Right.
You've already told me that I qualify for an FHA. I am at 590. Now the guideline is suddenly changing from 590 to 620, which, for some people it could take a little bit of time to pay their things and to get to that 620. Can you please clarify that?
Right. Yeah, that's a great question, Yoana. So it depends on what stage you're in the process. Okay. So if you are already in contract, then you most likely already locked in your rate. You're already locked in the terms with the finance company, either with us or whoever you're going with. So those programs or the qualifying metrics for the program are already in place. They're not affecting that person, that applicant. Okay. But if you're in a pre-approval stage, you're still home shopping, right? You're still looking for the home. You can be affected because although you're pre-approved, your loan hasn't been locked in yet, right? So when you go back to your lender, they may communicate to you that your loan application has been affected by the changes. So if you are concerned about the change, please do reach out to whoever you're working with and just confirm that your pre-approval is still valid. Because not only have we seen changes in credit score requirement or debt to income, we've also seen some programs just be suspended. So, for example, our 100% option was suspended about 2 weeks ago. So, if someone received a pre-approval a month ago or 2 months ago for that program, there isn't a program that we can offer them at this very moment, and we've been seeing, for example, jumbo programs also being cut down and limited, or restrictions being placed for those programs. So it's very important that you reach out to your loan officer and that you confirm your pre-approval is still valid.
Wow, you guys, I hope you heard that. So for us as realtors, it's very important to understand these guidelines and these requirements because a lot of the people that are struggling, and I've gotten some questions from people that we have in our database to touch on the credit score. So people with lower credit scores right now is going to be harder, right? So where 3 months ago we were saying, yes, come on, work a little bit on your credit score. If you want to buy a house, you can still qualify, and the interest rates are so low. Right now, the same person that didn't take action can be in a completely different situation where they might not qualify for another 3, 6 months, a year, nobody knows, right? So things are definitely changing, and a lot of people are in odd situations. So for the ones that are under contract and the ones that are already locked, the chances of them not qualifying anymore, you know, even right before closing, are pretty slim based on what Johan said. But for people that are still shopping around, ask your bank and also shop around. Now I know that, you know, I've worked with Johan for many years, and I've worked with several different lenders that are absolutely amazing at what they do. However, it's still part of my job, and Johan is going to confirm that with you, to always shop around. I couldn't emphasize that more. You know, when you want to buy a house, or you want to sell your house, it's very important to make sure you work with knowledgeable people, with people. Nobody is a god. Nobody is, you know, the best of the best, and people are learning, and we're here to help each other. But it's very important for you guys to choose people that actually have been doing this for quite a while and are understanding the changes and are learning about the changes and can actually educate you rather than provide some false information, right? So I've done that video before about everybody understanding that the interest rates have dropped to zero. And so you see, this is the reason why I'm here with Johan, because I couldn't say it better than he does. And I want to provide that value, and I want you to understand that things are changing, and you need to, when you want to buy or sell a house, you really need to know what you're doing and be advised by professionals. It's very important. And shop around. Some lenders have several, you know, different fees, different than others. Everyone's different. So when it comes to rates, Johan, I know now we're going from one place to another, but shopping around and rates, what's going on with rates right now, like with your company, with Guaranteed Rate? What can you tell us from a rates perspective?
Yeah, so rates have been very volatile. You know, I think that the audience that's listening to us, if they have been in the market, you know, to purchase a home or do whatever type of mortgage process, they've probably seen volatility in rates, you know, if they're checking on it often. So we're seeing the same thing on our side, and it's due to a lot of things. You know, it's due to capacity, you know, with the situation now with everyone working from home or limited to who can come into the office. It's caused a lot of stress with capacity. So right. Although rates may need to be lower, or some people feel that they should be lower, you know, a lot of lenders have been keeping them higher just to manage the amount of people that are coming into their system. Okay. Right. So that's one thing. You know, I think it's important for everyone to know that, as you were mentioning, if you don't qualify with one lender, it doesn't mean that you won't qualify with another. You know, just keep your options open. Do compare, you know, different options, different lenders, different banks. Not everyone is going to offer the same rate. Our rates have remained low. Okay, they haven't gone to zero as a lot of people think, but you know, they have remained in the low threes. You know, the average Freddie Mac primary mortgage market survey on April 9th, you know, and I just have to quote this information here so that, you know, our listeners can research it. The average rate on a 30-year loan was at 3.33 with fees and points of 0.7, and then on a 15-year it's showing 2.77% with fees and points of 0.6. And again, this is according to Freddie Mac's primary mortgage market survey, which is an average based on April 9th. And that's where we have been. That's what I've been seeing. And it really depends on everyone's credit, the program that they're applying for, the down payment that they're making. So every case is different, but that's the average level that I've also been seeing it here at Guaranteed Rate.
Thank you so much for emphasizing the fact that everyone's different. I get asked every day at least a couple of times what are the rates, and I'm going to emphasize this again. Rates highly depend on each individual's personal scenario. So if my credit score is 750, your credit score is 620. If my debt to income ratio is very low, I have absolutely no student loans, I don't have any medical bills, I don't know, car payments, whatever payments that actually count against you, your situation is going to be different than mine, right? So I may be getting, and plus the down payment. Down payment is very important because I may be able to pay 20% or 10%, you might be able to only come up with 3% or none, no. By the way, can you please give me a little bit of Johan, talk to me about the 0% down, North Carolina housing, anything that you can touch on that would be appreciated, because I just had someone ask me about how and what would they need to do to qualify with a lower credit score. Now again, you've just touched on how things have changed when it comes to qualification and all of the different programs. But if someone has a lower credit score, what do they need to do to improve their credit score to maybe qualify for something for 0%? Do you have anything that you can tell me on that?
Yeah, so North Carolina housing is still active. They're still taking applications. So their minimum credit score is 640, and that's what it's been for a while.
Okay, so they didn't change anything.
I haven't received any communication as of today of changes. We've seen other programs outside of North Carolina housing change, but not with North Carolina housing yet.
Okay.
The popular program with them, it's still the $8,000 down payment assistance program, so that can be some assistance, for whoever needs it. What I always recommend to everyone is to have some savings, especially now, especially with times the way they are, really not to expect any type of 100% financing program, because it can be very challenging. And even if it's available today, it could go away tomorrow just because of how uncertain things are. And also with needing to have money available for inspections and the due diligence and the earnest money, the appraisal, it's more realistic for them to know that they need to have some money up front saved. They can still use a tax refund if they're receiving it, or gifts. But that's really the best program that I'm seeing right now at this very moment. It's North Carolina housing, other than the 3.5% FHA program or the 3% conventional, which a lot of people know about.
Right. So you guys, are you still as busy as you used to be a couple of weeks ago with refi?
Yes, the refinance market is really booming right now. With rates as low as they are, a lot of people are saving a lot of money. With people having more equity now than they had back in, let's say, 2016 or 2012, when rates were at the similar level. A lot more people have equity now. So we're seeing cash out refinances to do upgrades on homes, pay off debt. If they've got into debt within the last few months or few years, we're also seeing them consolidate debt, or just simply improving the interest rate or reducing the years that they have left on their mortgages. So yeah, we are very busy with refinances. We do prioritize purchases, just because there's a lot more moving parts with the purchases, with people needing to vacate their rental units or wherever they're living, and they have to move by a certain period of time, we are definitely prioritizing purchases over refinances, but we're busy with both.
I'm getting a question from Mena. What about the FHA streamline refinance for someone with a 748 credit score?
Yep, so they can get it done. I'm not sure if there's a specific question, but with the streamline, the minimum credit score also increased to 620. The best thing to do is to reach out on individually on their situation, either to us or whoever they're working with, but they're still happening. We haven't seen that go away.
Okay. So, do you see any delays with appraisals? I have seen some properties go back on the market because people were losing their jobs. I haven't seen, from my experience so far and from all of the transactions that I've been closing, any delays with appraisals. Do you see any of that happening?
Yes, so there could be delays with appraisals. If the home is vacant, it's much easier for an appraiser to have access to the home. So those we tend to see turn around much quicker. But the properties that are occupied, that are still have people living inside the home, there's concern about contact with the appraiser, or the appraiser concerned about having contact with the sellers, just because of the COVID situation. So there have been delays also due to the volume. The refinance volume in general has been causing some delays with appraisers being able to get to all the orders on a timely manner.
Right.
Depending on where the home is as well, that could also affect the turn time. So my recommendation is to have a longer due diligence period if possible, if you can negotiate that. Before we were seeing maybe 7 days, 15 days, very aggressive due diligence period. But now we have to be a little bit more conscious that not only the appraisers, but the attorneys may also need some more time, because they're also receiving a lot of requests for title orders for the refinances, over purchases now. So they're busy too. And with a lot of counties being closed, sometimes they're not even able to obtain all of the information that they need. So they're taking a little bit longer to get the information. And also, a lot of them are working from home. I think that now they're more settled with working from home. But 2 weeks ago, 3 weeks ago, when everyone was transitioning from office to home, that there could have been some interruptions that caused them to be delayed on their process as well.
Right, so what I see on my end is that a lot of the closing attorneys are kind of mixing in between being at the office and being at home. But if they're at the office, they do curbside closings, so we're not really allowed to go in. I've gotten my checks in the mail, not picking them up personally, and as a buyer, they do everything possible to have documents signed online, also signed in front of a notary, and then just delivered in the parking lot. So definitely things have changed there as well. I had someone, Johan, that was asking about the first home buyer process. Now I've promised her we're going to go through that. Can you please give her a little bit of guidance on that? I'm not really sure if you have any specific questions about you feel free to reach out to me and to Johan. We'll definitely walk you through everything. For the purpose of this video, I'm just going to let Johan tell you about some programs, and depending again on your personal situation and what your credit score is, Johan can take you through several options. But Johan, tell me a little bit about the first-time home buyer program that you guys offer.
Yeah, so first-time home buyer program could be, the 3% down conventional option, or the FHA with the 3.5% down payment, or it could be a down payment assistance program through North Carolina Housing. Depending on the income, the assets, the credit, everything that we would look at to determine if they qualify, we would have to see which one would work best for them. Okay. Mm-hmm. Recommendation, I guess, for a first-time home buyer is to apply as soon as they can. If they know that they're not going to continue their lease, or that they need to be in a home within 3 or 4 months, my recommendation would be for them to apply as soon as they can, so that they can have a pre-approval letter already, and they can start working with a realtor, with you, as soon as possible and finding a home. That would be my recommendations, for a first-time home buyer. As far as the programs, again, North Carolina Housing is great if they need the assistance, but the 3.5% for the FHA or the 3% down for conventional would probably be the best and most competitive options at this point, because of a lot of investors and a lot of programs just being suspended with the situation that's taking place.
So
there are a lot less programs at this moment.
Can you remind her for that FHA and the conventional, what's the minimum credit score required, please?
Yeah, the minimum credit score is 620 on the for people that are purchasing. So some resources, I guess, that we can share. For example, annualcreditreport.com is a website where we can go and take a look at the history, the credit report history. It's a soft pull. It's not considered a hard pull. And we each, have access to this report once a year. So if you're trying to increase your score, my first recommendation would be to go to this website, take a look at the history. If you see something that shouldn't be there, that maybe you paid off a long time ago and it's still reporting as due or late, delinquent, charged off, or collection, you can dispute those items yourself. It usually takes about 30 days for them to come back with a result. To try to clean your credit up as soon as you can through that website.
Right, so I hope that helps. 620 would be the credit. I know that you were mentioning that your credit score is a little bit low. For the ones that are watching, this is someone that I have in my database as a future client, and she was asking to share a little bit and to talk to Johan about the first time home buyer program. So overall, guidelines have changed. Nobody really knows how the lack of payment of a mortgage is going to affect you, and I mean, maybe some people know. We don't at this point. We don't recommend doing anything that is not in writing or is not very clear to you, just because it could really affect your life, and we just don't know if that's something that that if you can pay. If you cannot, then obviously you have to have certain priorities and decide on what's most important to you. And if you are considering purchasing a house, just like Johan said, feel free to shop around and feel free to start. Don't delay the process, because you just don't know, unless God forbid you're in a situation where from a job perspective you're not in a good place. But especially for the North Carolina area, we haven't really seen price drops unless the homes have been sitting on the market for a while because they were overpriced from the beginning. I have not seen any price drops based on necessarily on the virus and on the situation, right? So we don't see as many showings. That is definitely true. It's been for 2 weeks already. People are obviously cautious and they don't want to get into homes. But these too shall pass, and if you look at your finances, and if you still have a job, and if you have a fairly good credit score, then I would highly recommend getting in touch with myself, and then I'll get you in touch with Johan, and just at least know what you qualify for, know your credit score. If you don't want to, go on creditreport.com, they can definitely do a soft pull. And I really want to touch on this because I, again, have a lot of people asking me about whether or not the credit score drops when the lenders pull your credit score. Johan, can you please touch on that a little bit?
Yeah. So when we pull the credit, there's no way for us to do it as a soft pull. So it will be a hard pull, at least with me, with us here, and I think it's the same with many mortgage companies. It depends on what the customer, what the client, right, what the individual is doing. Because if they're also applying for credit cards and different types of loans and auto loan at the same time as they're applying for a home mortgage, that combination can affect the score. But if they are being responsible, and they're not running it with every lender or every bank that they're talking to, then it may not affect their credit. There is a tolerance with 30 days or 15 days within a close proximity of time when you're doing this application for your home, that it said that it shouldn't affect your score. So if you're running it with 2 or 3 banks, you shouldn't see an effect to your score. But if you are also shopping for other things or applying for other items, or maybe spent something on a credit card that reported on your second application or right on your third application, it's a combination of different things that could affect the score, not just the inquiry itself.
Okay, thank you so much. So I hope you guys got some great information that you will use wisely. I will ask Johan one more question, and then I will free him. Johan, you're free to do whatever you want after this question, because I know I've taken a lot of your time and you have a lot of clients to take care of. Regarding refinancing, I know a lot of people are asking me whether or not they should refi now. Can you give me a quick overlook on numbers? So let's say, I'm not going to give you an example, but if I were to want to refi and my interest rate from 3 years ago is 4%, can you walk me through how much does that cost? When is it worth refinancing? When is the whole payment that is due at refinancing going to actually make sense over how many years and so on? Because a lot of people don't understand and don't know what refi is about. So if you guys are considering doing that, by the way, are you still doing the same as you were doing 2 weeks ago or so when it comes to refi?
So here's what I'm saying. That yes, people can still refinance. There have been updates, to I guess the guidelines, and who can cash out and who can't. For example, with the minimum credit scores, cashing out can have a little bit of a higher guideline, as far as qualifying for a cash out. So, for example, if you're cashing out with a government program, the minimum credit score will be 660. Okay. So it's going to depend on the person's situation, on everyone's situation, because if you have a high interest rate now, but you're planning on selling your home, then it may not be worth refinancing, right? Because you're going to get rid of that home pretty soon, and there are closing costs involved with the refinance process. The process is very similar as to when you purchased a home, with the exception that you're not moving anywhere, you're already there. So you will save some money, with the decrease on the rate, and depending on what you do with the years, right? So if you're going from a 30-year loan to a 15-year loan, then your payment may not go down. It may stay the same, it may go up, or maybe it comes down a little bit. It just depends on how long you've owned the house, how long have you had your loan, what loan you have right now. So everyone's situation is different, right? Here's what I can recommend for everyone. Employment is really the key right now to getting a mortgage done, okay? Because if you're employed and you have a high interest rate, or maybe you have a loan that had private mortgage insurance and now you have equity, those are the people that I'm seeing that are benefiting from the low rates right now and the equity that they have, because they're getting rid of the private mortgage insurance, the PMI, and they're also reducing the rate. And in many times, going from a 30-year loan to a 20-year loan, or from a 20 to a 15, or whatever combination, will save them a lot of money in the future on interest. But we, along with many other mortgage companies, we are verifying employment to the very end, just because we have to feel secure that anyone who's applying either for a purchase or a refinance is going to be able to pay the loan. Okay, no matter what the situation was when they first applied, things can change, and things have been changing very quickly during this situation. So if you're still employed, have a high interest rate, I definitely encourage you to take a look at your options for a refinance. You can save some money. There's really no rule of thumb, or minimum amount that you should save in order to do the refinance. Again, it's going to depend on your situation and what your goals are. If you're planning on keeping this home for 3 years more, for 5 years more, 10 years more, if it's going to become an investment at some point and you're going to keep it forever, all of that needs to be taken into account when you're talking to your lender to make sure that it's really worth you going through that process.
So I lied, because I have more questions coming up. But I'm going to go to Crystal in a second, but I'm going to answer Mena. Is there a minimum amount for refinance loans?
So there is no minimum loan amount, but what I can say is that there are, like in North Carolina, there is a high cost rule law that impedes us from doing loans that are usually below, I would say, 50, 60,000. Not that it can't be done, but it becomes a little bit more challenging to get it done. And sometimes, although we want to do it, we're just not allowed to because of the high cost law that's in place in the state. But there's really no set minimum for financing. Okay, and going to Crystal, North Carolina, does the North Carolina Home Advantage Mortgage programs apply to the move-up home buyer? Yeah, so with North Carolina Housing, there are different programs that are offered within North Carolina Housing. So the $8,000 program is for first-time home buyers, okay, not for the move-up buyer. But there is a separate program, Home Advantage program, that does not require you to be a first-time home buyer. Okay, the terms can be different. The interest rate, for example, can be different. Their interest rate is published on their website. If you Google North Carolina Housing Finance Agency interest rates, it'll come up there. You'll see what the rates are for the day for each program that they have available. And then they also have their requirements as far as the minimum income, the minimum credit score, and the purchase price. They also have a limit as to how much the price of the home can be for you to qualify for that program. Okay, so and it's also county-based, so it's very important that you look at the county where you're looking to buy to see if you qualify for the program. Okay, I hope that answered your question. If anyone else has more questions, we are here. I will be waiting for another couple of seconds before I actually free Johan, like I promised him I will. And in the meantime, Johan, anything else that you can add? I know that it's been overwhelming for all of you, and
Just so you know, Johan used to be super easy to get in touch with, and today I had to back him almost to be able to bring him at 1 o'clock, because I promised all of you guys that I'll be on, and this probably has been one of the longest lives I've ever done, but it's just so necessary. It's just we're so busy, believe it or not, you guys. For us has been very busy. There's no inventory, but there's still a lot of people that are purchasing because of the low interest rates, and it's just the new normal for us. So you know what, I'm going to touch on something else, Johan. For investors, what do you see from perspective of investing, credit scores that they need to have, down payment? And I'll be touching, after I let Johan go, on difference between down payment and closing costs, because everybody's still confused and there's a lot of differences on that. But give me a little bit of an overlook about on investors.
Yep. So there could be, I guess, additional requirements when it comes to assets with investors, or more with people that are self-employed. In many cases, we have investors that own their own business, that are looking to grow their portfolio of properties that they own, and with things tightening up a little bit, there could be additional requirements for them to have more money saved as reserves, to show that, if the tenant is not able to pay the rent, either now or in the future, that the applicant has enough money to cover any type of emergency funds. The credit score requirement, I haven't seen a change to credit scores yet, but debt to income ratios can be tighter, when you're below 700, just in general, or asset requirements when you're below 700. But investment loans are still taking place. People are still purchasing properties as investments if they can find a good property out there. The interest rate can be different, compared to a primary home. I don't have numbers for you to provide, for this call, but if anyone wants to know of a particular scenario, no obligation, they can call me or anyone, just to find out, where rates are for investors. Because most of the better rates that we've seen have been for primary residents, for people that are looking to occupy the home that they're buying. And then the minimum down payment, that changed for investors a few months ago. It's been 20%. It used to be 15%, but now I'm seeing 20% down for investment homes. Right.
Okay, so I see that
a last recommendation, Yoana, for anyone that's in process and maybe closing soon, very important for them to go to the bank as soon as they can, to schedule the wire, or to take the certified check out from the bank, because a lot of banks have closed their lobbies, and they're only letting people in, one at a time or a few at a time, or only by appointment. So just call whoever you bank with, wherever you need to take your money out from, to schedule your appointment before your closing.
That's very important. So if you guys have any earnest money, additional earnest money, and that's a good point. Thank you so much, Johan, for all of the people that I have under contract and they need to get money out of their banks. You guys need to make sure you schedule, because as you know, in most resale contracts, additional earnest money needs to be provided at the end of that due diligence period, and it has to be a cashier's check or a money order. It cannot just be a personal check. So for that purpose, I would highly advise you and me as a realtor. My job is to make sure a couple of days before that happens, I remind you of that. So thank you, Johan. That was a genius point right there for all of the clients that are already under contract and need to have some additional money, earnest money deposited into the trust.
Yeah, Yoana, another thing I heard you mentioned money orders. If they do happen to purchase a money order, please keep the receipt, please keep stubs, please keep all of the documentation, because it's a little bit harder to track a money order than it is a check, you know, a cashier's check or personal check. So just make sure you don't throw away the receipt and the documents.
Yeah, and you take a picture, so you always need to have a picture of the due diligence of the earnest money so that you can provide it to your lender. And so we're still seeing 30 days close, right? So the due diligence, you're advising us to extend that to the best of our capability, but we can still close the loan in 30 days.
Right. Yeah, we're still seeing closings take place within 30 days. You know, the more time we can be provided, the better it is, but we know that sometimes there's situations where it can't happen, you know, so we will do our best to make sure that we're meeting all the deadlines.
All right, that all sounds good. Guys, I'm still gonna be here for 5 minutes if you have any questions. Johan, thank you so much.
I'll stick around, Yoana, for a few. Just let me know if you have any questions there.
Okay, all right. So you guys, we've learned a lot today. If you have any other questions, I am here. Just wanted to give you hope. To be honest, this was a call that was supposed to just calm you down, and I know that there's a lot of uncertainty, but overall we're in this together, and we can only do our best, right? So we partner up with the best of the best in the industry, and there's so much information that you can learn, and that's the reason why we're doing these videos. Just I learn sometimes as I go as well, so it's all about getting all of the pieces together, just like a little puzzle, because buying a house and selling a house can be very stressful, so you need to do it alongside people that you trust and that have been helping people, you know, for years now and know what they're doing. So thank you so much, Crystal. I appreciate it. I am here if you have any other questions. Johan is here. I will definitely. Johan, can you please just mention quickly your cell phone number, just for everyone that's there? It's so funny. He's like looking up his.
No, I have my cell number. Yeah. So I'll give you my contact information. So yeah, my cell number is 631-921-8560.
631-921.
8560. So you can call, text. My email is my first name, Johan, JOHAN, .Alvarez, ALV as in Victory, AREZ, @rate, rate.com.
And you speak Spanish?
I speak Spanish, yep. So if anyone out there prefers to handle this process in Spanish, I can definitely help out.
And I speak Romanian, and I speak Hungarian, and I don't speak Spanish, but I could also speak German because I used to be fluent. So overall, we do have a good 5 languages that we can help you in, which is great. So we're here again. My number is 919-348-7303. Johan 631-921-8560. Feel free to rewatch this on our YouTube channel. It's going to be loaded sometimes this week. We only have like 100 other videos that we're going to load, but hey, we're doing the best that we can to catch up, and in the meantime help as many people as we can. Johan, I think you are free to go.
Thanks, Yoana.
Thank
Stay
you so
healthy.
much.
Talk
I
to you soon.
appreciate it. I will be bringing Johan again, so if you guys have questions, he'll be coming back again with more information for anyone that needs more. Take care.
Bye-bye.
Bye. Hola. Ciao. All right, so I've ended this meeting. This was a recorded Zoom. And guys, you're welcome, everyone. Thank you, Crystal. Thank you, Mena. Thank you for all your good questions. I hope this wasn't way too long. It was very informational, and if you guys have any other questions, concerns, we are here. The pricing in Wake County has been increasing over the years. I'm not sure if any of you has more time to spend with me, but just got the release of Register of Deeds in Wake County for the pricing, and It says affordable real estate is increasingly difficult to find. The typical 2014 affordable property was up in price by $60,000 after 5 years. So in 2019, the median real estate sales price was $303,000. And so Register of Deeds Charles Gillian said, within the price range covered by this data, parcels in general tended to increase in price by about $60,000 over 5 years. For example, the kind of property that was $125,000 in 2014 grew to about $185,000 in 2019, and the kind of property that was $185,000 became a $245,000 property in 2019. This is the general trend. Values for specific parcels can vary widely. So just letting you know what's going on. We've talked to a lot of people over the years, and I remember back years ago, 2012, when we were saying, guys, you need to take action. This is a game of numbers. This is a game of studying the market and economics and understanding whether or not you should be buying now or not. Now, while I understand most of you are under pressure with your jobs or feeling very uncertain, you also have to remember that rents increase as well. So if you are paying 14, 15, 12, even 100 per month in rent, and that can increase all the time, you need to see that. You need to look at that and see what you could be qualifying for right now. So I wouldn't necessarily say, this is just because of the coronavirus pricing has decreased, because as I said before, it hasn't. I mean, I haven't seen anything. I've seen a lot of properties that were overpriced before. There's a slowdown, but the pricing has not decreased so far. So don't tell yourself things that are not realistic. So study the market, understand the numbers, and the best thing to do if you are considering purchasing, or even if not now, but in 6 months to a year, is always call a lender and say, this is my credit score, or do a hard pull. Just know exactly where you are with your credit score, and understand that you are going to have to come up with some money. So as I said before, I'm going to touch a little bit on the difference between closing costs and down payment. As you heard Johan say, down payment is 3%, 3.5%. So let's say you have a $200,000 purchase, you're going to have to come down with a down payment of 6%. Just as an example. Now that's a down payment. Closing costs are very different. You're going to have some costs that are going to be upfront, like due diligence funds, the earnest money funds that he was mentioning, like that earnest money check that goes into a trust account. You're going to have paid outside of closing costs, such as an inspection, like a regular inspection, a termite inspection. You might want to choose to do a radon inspection. You might want to do a survey, which we highly recommend. All of these things kind of add up. So ideally, for you to be purchasing a house, you need to have some money in your savings. You can't just say, okay, well, I'm buying a house and there's no upfront money. And based on all of my experience, you can't just say, I'm going to give this percentage in due diligence. That's all negotiable. We've had cases where we were putting offers on $200,000 homes, and my clients offered $8,000 in due diligence. And then we've had cases where we put an offer on a $500,000 home, and we only gave, $1,000 or $2,000 in due diligence. So again, that's all negotiable. But from me as your buyer's agent, right? My job is to negotiate on your behalf and make sure you're not paying a lot of due diligence and earnest money. The listing agent's job is to get as much money as possible, just in case you decide to walk away in your due diligence period. So I wanted to emphasize this because, again, there's a lot of people that don't know that they have to have some money that they need to come up with at the time of the contract. So if you, as Johan said, if you think you're ready to purchase a house, make sure you call a lender and lock something if you can right now, while you have a job and the interest rates are low and you are in a situation where you can do that. Because if you wait 2-3 weeks whatever, I don't know what the situation is with the virus, it might be too late. It might be that the requirements are going to change. So, right, so suddenly everything changed. So the same requirements, the programs that were existing before, right now they're not existing, just because it's high risk for banks to give loans to people that might not be able to keep their job or might not be able to pay their mortgage, right? So if you have to have a 620 credit score versus 580, or you might have to have 640 or 700, or whatever the case is, things can change. So if you can prioritize on your payments, and if you understand that when purchasing something you need to have some money saved, that is really important, because a lot of people get into this and they think they can buy a house without an agent. They go even to new construction, things are just pink and beautiful, the model homes look great, but there's a lot going on in the background, and there's just so much that you're not aware of that can affect you. And who wants to be affected, right? So if you are a seller, right now might be the moment where, just like Johan said, if you're considering refinancing, you just call your bank and see if it's worth it for you to refi. You know, did you have PMI before? What interest rate did you have? How much equity do you have in the house? How much is the refinancing going to cost? Are you planning on keeping that house for a while, or are you planning on getting rid of it, you know, in 6 months? Is it worth to do a refi? So listen to the news, always read what's going on, and just keep informed, and know that we are here to help with any questions. If there's no additional questions coming from anyone, I'm going to let you go. Thank you so much for watching, and again, feel free to watch this as a replay on my YouTube channel, Yoana Nin. For any other questions, 919-348-7303. Take care. Have a beautiful rest of your week. Bye-bye.